Good evening, Marshall Reddick investors. Welcome to tonight's presentation on investing in Florida real estate. This is a topic that many of you have asked for, and I know you're going to get a lot of value out of tonight's presentation. But before we get started, I did want to talk a little bit about Marshall Reddick, a little bit about who we are. We're unlike a traditional brokerage where agents help their clients buy and sell their primary residence. We do that as well, but where we stand apart is we not only help our clients with primary purchases, we also help them invest in real estate across the country in our vetted markets. Most of our clients at this point own multiple rental properties under their portfolio with us. And then our next division, probably something that goes hand in hand with owning investment property, is our property management division. Now, there's no point in owning a great investment property if you don't have great property management to oversee your investment. Marshall Reddick has boots on the ground management with 24/7 service within all of our vetted markets. We also have, we're not going to be talking about it this evening, but just something we can talk about one-on-one. We have private lending division. So what does that mean? Let's just say you want to invest in real estate, but you don't want to own the physical property. Well, you can be the bank. In other words, you can find one of our fully underwritten loans on our website for anywhere from 3 months to 30 years, depending on the note, and you can collect the mortgage payment and be the banker. This is a great way, great alternative to invest in real estate without actually owning the asset. Now, conversely, under our private financing umbrella, you can also be the borrower. We qualify our borrowers based on the property. And this is a great option if you want to do fix and flip or investment transactions and you don't want to go through a conventional lending process. And last but not least, we won't be talking about this as well, but we can definitely talk about this one-on-one after the tonight's webinar, is the fund. The fund is designed for investors who want to pool their resources together and own a portion of many notes on different properties. Now, this is a great vehicle for investors who don't want to take the time to pick and choose their own private mortgages to fund, and your money is diversified over many properties in many vetted markets. And just a little bit about myself. For those of you who don't already know me, my name is Sherry. I've been a licensed real estate broker for over 20 years. I've also spent 7 years in real estate finance as well. Lived in California my whole life and bought and sold many primary residents along with many investment properties encompassing 3 states. I'm also an avid investor in private lending and in the mortgage fund. Real estate's really truly been my passion. I purchased my first home at age 20, and I truly enjoy helping my clients navigate through their investment journey, both primary and investment properties. Want to take just a moment also to show you a little map of our national footprint. All the areas you see are where we have boots on the ground in vetted markets. Of course, Florida being one of them, we're going to discuss tonight. And then how we choose where we're going to extend our investors. This is really important. This is what we look for. It has nothing to do with where you enjoy taking a vacation or places that you enjoy. This all has to do with the analytics of where investments are the best for investors, where we have landlord-friendly states versus tenant-friendly states. First thing we look at is job market. Military, medical, who are the employers, what are the industries, and rental demand. Are more people moving into the area and why? Number 3 is the economic diversity. Number 4, housing affordability, cost of purchase versus rental value. Strong education, and then my favorite, which should really be number 1, it's not really number 6, is good property management, reliable property management. Without the proper property management, your investment's just not going to flourish. Very, very important. And I want you to meet my counterpart in Florida, Jerry Robinson. He has been with Marshall Reddick for a number of years now, and he's going to take over the meeting and discuss Florida and investment potential out there for you guys. Jerry?
Hey, thank you, Sherry. Welcome everybody to the webinar on cash flow and appreciation. in Southwest Florida. Well, in Florida, in Southwest Florida in particular. A little bit about me. I'm a licensed Florida broker associate and realtor for the Marshall Reddick office located in Cape Coral. I'm also a licensed real estate instructor. I have been since 2018. It gives me the opportunity to kind of stay up on the market and changes to laws and things like that. Plus, I have a real passion for the teaching and educational side of this business. I've been in Southwest Florida since 1997. That was a long time ago. Been here since 97, so I've had the opportunity to watch the surrounding area, Lee County, Charlotte County, and Collier County kind of grow up over the last 20 years. So I started my real estate journey in investment real estate. I started working with large-scale apartment communities back in 2009. Turned a couple of those around from a really rough place coming out of 2007, 2008, and really just kind of fell in love with the investment side of this. In 2015 is when I actually got licensed and moved over and started helping an array of investors in this market. Currently, I work both as a sales associate and a broker associate here, as well as a mentor to the agents that we have in the office. Came out of being a sales manager for the office for a period of time. I really missed the one-on-one connections at that time. So I have that, and I have the ability to still kind of teach the agents that are in my office. My specialties include the multifamily, commercial, and investment portfolios in this area. Being here for as long as I have been, watching how rapidly places like Cape Coral, Punta Gorda, Port Charlotte have been growing up over the years, I've had a real nice ability, or a real nice opportunity, to watch things flourish. And I kind of bring that as we go from there. A little bit outside of the realm of real estate, I am the proud father of 4 kids, which keep me busy with soccer, piano, tap dance, and everything in between. They run from the ages of 9 at my youngest to 21 at my oldest. So big gap there, but it's a definite pleasure in life. So, all right. So just some kind of overview, and I'll hone in as we get a little bit further into this, just to give you guys kind of a synopsis of what Florida looks like. So Southwestern Florida encompasses everything pretty much from all the way up from Hernando County down to Collier. Our office is located in the center in Lee County right there, which has Cape Coral, Fort Myers, and Lehigh. Probably the biggest part of our market and the biggest place where investors tend to find properties in regards to either cash flow mentality or an appreciation side. Cape Coral has been really good for that. Collier County, which most people will know, Naples, Marco Island, Golden Gate, and then moving a little bit north from us, which is Punta Gorda, Port Charlotte, and Inglewood, it's a little bit of a different market. Still some opportunity there, and a lot of open land for development. So builders are using that for, especially spec builders right now are building a lot in that area. So Lee County by area runs in at just over 1,200 square miles. It's huge, right? Cape Coral's 120 square miles, making it the 3rd largest city by landmass in all of Florida. County population right now sits at about 808,000 people. The available homes in our market, and what I mean by available homes is the amount of homes that you actually have built here currently sits at about 442,000. And it has a renter market share, meaning the amount of renters or rental homes versus primary homeowners in the area is at about 27% of the total population. In Charlotte's a little bit smaller at 858 square miles. Punta Gorda being the largest in actual land area, which is 21 square miles, has a population of just under 200,000. Again, same idea. The available homes up there are about 118 to 23 with a renter market share of 23.9. We'll get a little bit more into the demographics of the different areas and as we move on. And then Collier, right, has Naples and Marco, Golden Gate, places like that. It's about 2,305 square miles. Marco Island being one of the largest, at one of the largest, 1646. The county population is right around 330,000 people. Available homes again on that one is about 240, 238. And the renter market share over there is about 25%. Most of that market share in that market has more to do with vacation rental, short-term, Airbnb, those types of things. Similar in Punta Gorda, there is a more dense population of annual renters in that, but you'll see a lot of the Airbnb side. Lee County, however, while the coastal areas have some Airbnb, it's actually widely populated by annual renters, which is where we tend to focus as Marcia Reddick. So as I said before, Lee County, Florida has about 808,000 people in it. Fort Myers, Cape Coral, and Lehigh are the biggest targeted areas for different reasons for investors. But these areas would also include Estero, Bonita Springs, Sanibel Island, which a lot of people will know and have probably seen on the news, especially with the hurricane that passed last year. Fort Myers Beach, all of those areas right there. There's opportunity pretty much wherever you look at that side. Really depends on what your investment strategy would be. The breakdown. So as we kind of move into a little bit more micro look at the area and where we tend to focus is going to be through the Lee County market. The Cape Coral population as it sits as of June of 2023 is about 216,000 people. 23% of those homes are currently rentals with a 10-year appreciation of 59%. Right, so COVID has obviously done a lot to it's hurt some areas. For us, it is definitely helped with the values of properties in the area, and you'll kind of see that throughout. Lehigh Acres has a population of about 123,000 people. A lot more rental communities out there. It's more of a cash flow, so your B, C, and D type rentals are going to be out there. 10-year appreciation at 46.9%, almost 47%, which is phenomenal. The Fort Myers metro area, so that encompasses Fort Myers, North Fort Myers, and then moving down through South Fort Myers, and starting to move into the Estero, Bonita Springs area. That population much higher, or at least much more dense, at 343,000. 52.2% of the homes are rentals. A lot of those come from the apartment community side. A lot more apartment communities are located in Fort Myers than what you will find in Cape Coral currently or in Lehigh Acres. But the 10-year appreciation there has been absolutely phenomenal, especially on the older homes, with an average right around 91.07. And then Estero, Bonita Springs, kind of a higher end market as you're moving towards the Naples area, has a population of 96,260 people. And then you have Sanibel Island, a little bit more elite there, with only about 7,000 people residing in and around the city of Sanibel, or on the island. So Sanibel and Captiva. Some questions that we tend to get. One of the big things that we like to make sure that investors have an understanding of in the market for Southwest Florida, especially through Lee County. One of those things are the assessments that are coming through currently in North Cape. This has come from a need over the last 5 years that has we've seen a huge influx of not only investors in the market, but we've also seen a huge influx of people. They're moving away from higher tax, different political climates, a lot higher rental rates in some other parts of the country, and have all been moving to Southwest Florida, it seems. Because of the added tension that has been put on the systems out here, most of these areas were well and septic properties for a period of time. Early 2011, 2012, they started with finalizing the first section of the assessment plan, and it's just kind of moved since then. They're a little ahead schedule as it stands right now, but this expansion, as it's in its third phase right now, and it's got 12 phases that are going to be coming after this in the next. They're averaging 12 to 20 years before they get through the final one. The assessments on these properties as they come in. So if you were to be buying in a well and septic area, it would eventually get to a point where city water and sewer would be brought to that location. When that happens, there is an assessment on the property, and that's just something that I like to make sure everyone is aware of. It is to a benefit. It's so people don't run out of water in the area, but it is something that's definitely good to know when you're considering buying a property. One thing that I do like to mention with this is that you will find houses in North Cape, specifically, this is all North Cape, that are either well or septic, or their city water and sewer. What we have found is, even though that there is an assessment that comes on that property, you can pay it all at once, or you can pay it over years with your taxes. That's up to you. It does raise the value of the property. So I recently had the opportunity with a local builder that there were two houses, the exact same identical build. They were 2 streets apart, and the difference in value, they were both under contract, but the difference in value was equal to the assessment. That's kind of a big difference to know, but it's also good to know that when that assessment comes in, you're not on a losing end of that side, right? It just means that the increase in value is there. And people still buy in both sides. So if you have any questions about the assessment, feel free to reach out. I'll be more than happy to explain the entire thing to anybody. Because again, we're looking this Southwest Pine Island Road, which you see right there in the purple in the middle, is kind of the main cut through between North and South Cape. Because of the added volume of people, the added density of people that have come in, and all the building and all the houses that have been going up in that area, there was a need to bring more commercial businesses to Cape Coral. So houses, it's one of those things that the closer you are to the businesses, the value of the properties tend to rise quicker. The further out, which at its furthest length in Cape Coral is about 15 minutes away from them, the values come down a little bit at that point. But a lot of these retailers, Aldi, Bed Bath, Bonefish, couple of the other ones, there's a reason they're moving to this area, right? And they do all of their models of why to have a store in a certain area based on the density of the population around them. So as that density gets higher and higher, obviously these businesses find an opportunity. This is why they come in. So why is Southwest Florida so popular now, and even in past years? Couple of things. One, our unemployment rate right now is at a rate of 2.7. It's up about 2 points in the last 4 months, but we still have finding a job is not a difficult thing at that point. Forbes had listed us as the 3rd fastest area for job growth in the nation. It also ranked us for the best place for small business startups. The biggest sectors of our income for people in the area right now have been medical, which is always big in Florida, right? Construction seems like it's always going on. So there's never kind of a loss for there. Teaching in our area, you'll see down below, there's 109 public, private, and charter schools just in Lee County. And then obviously we're the Sunshine State, right? People come here to vacation, to have fun. So that's another big part of our income to this area. Median income in 2021 was about 62,000 per household. Currently, at the most recent numbers, we're now sitting at about 68,000. About a 9% increase over the last 2 years. These are the parts that people really like with Florida, right? And there's 47 miles of Gulf beaches in the area, and there's about 400 miles of canals through Lee County, predominantly in the Cape Coral area. Cape Coral was originally designed with the mentality that everyone was going to have waterfront property. It was also a means with the way that Cape Coral was built back in the 50s in order to get water to these areas. So yeah, and like I said, that we have quite a few schools that are in the area as well. All right, the Southwest Florida economy, or kind of what it looks like here. In Southwest Florida is witnessing a massive growth, especially since honestly since the pandemic started. We have seen a huge growth with a lot of people that began working remotely. They were able to keep their jobs in denser metropolitan areas and come here, still being able to do the same job that they do and live just as well. So that was a big drive for us, keeping our rental market filled, and it still is to this day. We still have people coming in. The population's growing by leaps and bounds in our area. Jobs continue to come, whether it be small businesses or other companies that are coming into our market. Lee County has always been a very business friendly. It's really easy to start a company here. It's really easy to, it's really beneficial, I guess I should say at that point. The taxation and the way that things are in Florida have really allowed for a lot of these things, people that can come and make it on their own versus being stuck in a W-2 somewhere. So this is actually a really, really fun part that's here. So there has, since the bubble 2007, 2008, come about 2011 moving on, our demand has always been higher than the supply. So it's often, even now, while we're in more of a neutral market right now, we are still getting above asking offers on properties. And it's a little weird too, because we're getting those on top of being able to negotiate a little bit more. So it's kind of a weird place for us down here. On average, Lee County has about 1.3 million annual visitors who spend on average about $1.2 billion a year in our market. And so job growth rate in Southwest Florida has been approximately 6.2% year over year. It's the yearly average, but the labor force has only grown by about 1.6 annually. So while we do have some unemployment in the market right now, honestly, there are more jobs than there are workers to fill them. Even in the construction side, now construction has kind of learned to work with this, but there's been periods of time in the past, especially not so much in recent years, where builders, spec builders, things like that have had to run multiple crews, as sometimes they lose one, sometimes they kind of move that way, and it was starting to extend their times. They've shortened it up now to about 6 to 8 months on a new construction build, but that was where a big part of that was. The GDP of Southwest Florida is right around 50 billion. It's grown about 35% over the last 10 years. Like you said, Forbes ranked us as the 3rd best jobs in the US. And our unemployment rate sits where it does at 2.7%. Some basic real estate facts, just so you kind of have an eye on the area right now, is typical home values in all of Southwest Florida right now, according to Zillow at this point, which is hit or miss, but it's a rough average, and it's not that far off. It's about $398,000 a home. Home appreciation has been at about 5.2% year over year. When selling homes in here, sell the list price, meaning if you're putting an offer on a home right now, the average ratio that we see is about 96.5% of what you buy, or what list price is. Lehigh Acres actually has a big part. Lehigh and Fort Myers, I should say, has had a massive step up in appreciation, and even in the rental market right now. For the longest time in our market, Cape Coral kind of had the highest rents as there, but the home values were much higher. Lehigh Acres on the other side of that, rental rates have increased dramatically out there, with duplexes and multifamily on par, which you're going to find in Cape Coral. Which Cape Coral has always been known as more of a place to park some money and let the appreciation grow on it. So, and you'll see some numbers here on some properties that I have pulled between Cape Coral and Lehigh, and the differences, meaning the amount of income that are coming in from them. Rocket Mortgage actually came up with the little graph here to the right that indicates kind of where market conditions have been. We're solid in a neutral market right now. Really, really good properties tend to go over asking. They're slightly over asking. And then you have, whether it be a distress home, whatever the case may be, the market kind of dictates where they're going to be. That's been a lot more in Cape Coral, especially since the hurricane. Lehigh Acres, however, is currently in the top 10 for real estate appreciation across the nation. It's just absolute unreal growth out there. What we tend to see is builders, especially new construction builders, as land values rise, moving further inland in order to capitalize on lower land values. When they're selling the homes, they're able to keep their margin kind of the same, as well as keep prices down for those that are buying those types of properties. Excuse me. So like I was saying before, Southwest Florida, Cape Coral especially, has been ranked as one of the best US cities to start a business. Weather, that's a big reason, right? Why everyone wants to come. Fishing and fun in the sun. Economic opportunity, the ability to start a business or to take control of your business at that point. We have no state taxes, so everything is on a federal level. And then obviously the entertainment options, whether it's theme parks, whether it's events, concerts, you name it, you can pretty much find a place that's close by to do it. Cape Coral is almost the dead center between the three biggest metropolitan areas in Florida, which would be Orlando, Tampa, and Miami. Those markets, again, great for investing as well. The market has become almost unreasonable in them, and so people kind of move to the outskirts. We just have to sit in the dead center of that. So no state personal income tax. There's no corporate franchise tax on capital stocks. There's no state level property tax assessed. You still have your city and county, but city or county, depending. You have no property tax on business inventory, and then there's no sales tax for manufacturing machinery and equipment. And while to the normal person, this may not be a big deal, to those companies that are looking to expand their businesses, these are the types of perks that they would be looking for. And with that comes new money, comes new jobs, and new opportunities. So now we're getting kind of really deep. Now we're looking kind of at the household mixes that we find here. Average household size here is 4. Current median age of the area is about 48.8 years. The fastest, and this is actually a really, really kind of unique part of our area. So Cape Coral in itself, in the surrounding areas, but Cape Coral specifically was originally going to be designed as the nation's largest retirement village. And that's how it was being designed when the plans first started coming to be back in the late 50s, early 60s. And so a lot of people going into the 60s and 70s, they were buying their retirement home here. What happens when you're 60 and 70 is eventually you get to a point where you're no longer able to care for a house yourself. It gets passed on to family or it gets sold, whatever the case may be. And so we've especially over the last 20 years, we have steadily watched the median age in our area drop. In 2000, the median age for our area, I think, was 59.6 years. So over 20 years, we've dropped 11 years in age. And so it's not surprising that the fastest growing age range in our market right now is 25 to 34. And the fastest declining is 65 and older, right? And so a lot of the businesses that are coming to the area right now and a lot of the opportunities that are coming to the area right now have a much different focus than what they've had in the past. We're starting to see things like larger multifamily communities pop up in the area. Things that 20 years ago they never would have considered putting in Cape Coral or Lehigh Acres or anywhere else. Average rental increase annually, this is going to be going back over the last 5 years, was at 8.4%. That's of May 2023. And we've still seen some increase happen out in the Lehigh Acres market. Cape Coral has been a little bit more stable. It hasn't gone down, but it hasn't reached much further than that. Currently, the most popular thing that tenants are looking for in our area is a 3-bedroom, 2-bath at a minimum. And it doesn't really matter at that point whether it's single family home or multifamily. But it has been steadily ticking towards seeing the 4-bedroom, 2-bath mix, and we're starting to see more of those properties populate our area. The biggest items that most of our renters, and this is probably true for a lot of areas, is a garage, a fence, pools. It's funny, everybody wants a pool in Florida, but once they have a pool, they never swim in it, and they complain about having to clean it. And then pet friendly. Pet friendly is definitely a big thing here, right? A lot of Florida is outdoor living, and so being able to have their pets with them is something that everyone enjoys. Myself, I got 2 dogs, cats, chickens, and the whole 9. Okay, so a little bit earlier, I was talking about the differences kind of between the main areas that we focus on here. And while these may be the main areas that we focus on, we do manage pretty much everything northward to Sarasota all the way down to Naples, North Naples. So we do work through that whole area. This just happens to be kind of the epicenter of everything, where our office is located, where a lot of our properties tend to be found. So there's really 3 distinct areas in this band in the center of this. And these are going to encompass kind of Cape Coral, Fort Myers, and Lehigh Acres or Lee County. So in Cape Coral, the investors that are looking at the ability for long-term high appreciation on their properties, on average 3 to 5%, sometimes higher, especially in northern Cape Coral right now. Those properties have appreciated a couple points higher than that. Typically, you kind of have a trade-off effect with this, right? If you have a property that's going to be high appreciation, usually the cash flow tends to be a little bit lower. It's a more affluent area than what you find on the other side of that, right? So when you're looking at properties that are, luxury A and B rated properties, the cash flow tends to be a little bit lower, right? But the properties tend to be taken care of better. The tenant quality is different, is in a better place. You usually see a higher median income in those areas, right? So in Cape Coral, that's exactly what we see. The average rental increases in Cape Coral have, for the most part, exceeded all other areas. And then right now, Cape Coral, because Cape Coral is such a young city right now, only being around since late 50s, early 60s when it started. most of the land development that we have going on for single family and multifamily up to 4 doors, and now even some of the larger multifamilies is taking place in Cape Coral. With Fort Myers is kind of your hodgepodge of everything that you could find. If you're looking for appreciation properties, you can find them in South Fort Myers. If you're looking for high cash flow properties, you're going to find that closer to downtown. And it's funny in Fort Myers because one road can separate, and in some locations, just one road, whether it be, McGregor's a really good example of that. You have, luxury and A-class waterfront properties on one side of it. You move right across the road and right past the first set of commercial buildings, and those properties are now more of a cash flow property. The lower price, they do appreciate, it's just slower. And the rental rates tend to be a little bit lower on that side versus the other. And then Lehigh Acres is kind of an up and coming. As a long-term hold, the appreciation rate tends to be a little bit lower. It seems to be higher usually at the ends of a curve, right? In the ebb and flow of real estate between a buyer's market and a seller's market, you usually see it a little bit higher, and usually it's because the land values out there tend to be easier for your spec builders to manage. One of the big things out there, cash flow, especially with the rental rates that have gone up. Two of the properties I'm going to show tonight will kind of reflect this. One in Cape Coral, one in Lehigh Acres. There's about $100,000 difference between the two properties, with rents that are not horribly different than each other. Maybe a couple $100 off at that point, but $100,000 difference will make for a bigger cut. One of the big things, because it is a cash flow area, and on paper the cash flow properties can always look great, but one of the big things that I typically will recommend with my clients in this area is that if you're aiming for properties that are just kind of a cash flow, you get something coming in every month, is to pay proper attention to the preventative maintenance. There has to be a commitment to the preventative maintenance on these properties. It has low walkability scores primarily because there's not a lot of commercial out there. The density is a lot less. The one nice thing about that is, especially for really long-term holds, 30, 40, 50-year holds, which is longer than some people may hold, but for those, the appreciation is going to grow as the population in Fort Myers and Cape Coral continues to boom. They're going to run out of land, and Lehigh Acres is going to be the next frontier that people move into. And so you'll see more commercial and things like that coming in at that point. Any questions on any of these right here, feel free to reach out. Me and Sherry will be more than happy to answer those questions. Okay, so this is my favorite part of the entire presentation. This is where I'm going to I'll bring some of the properties that are on market, that have hit the market recently. Some things that we are working with. This was a property. This is a property of mine. It was in Northwest Cape, and this is what we would call a cash flow analysis of the property. It gives you kind of an idea of what to expect as an income on the property as you kind of move through. So list price on this particular property runs in at about $335,000. So we've got the down payment, initial repair, closing costs, and all that, giving you the idea of what you're looking at as an investment property. This property with a pool was a new construction. It was built 2020. Would rent right now at least $24.95. And I say at least because I do try to be, I don't want to say real at that point, but I do try to set up for at least a baseline. I'm pretty conservative when it comes to the gross rent side of it. I know what we can hit. Could it go higher? It absolutely could. Mortgage payment on the property, looking at $1,443. Taxes kind of gives you a breakdown of what fixed monthly expenses would run in at about $2,156. That also includes the management, management fee and all that other fun stuff. So fixed monthly expenses would run you in at about 21, giving you a monthly income right around $340 a month. These other things that are underneath, we treat almost as a ghost number, and you'll see them kind of if you go to our website, you'll be able to see properties like this and kind of why we call it a ghost number. These are more the what ifs. Once you have a tenant in place, the 10% of rent on that side, that goes away, right? The vacancy side of that goes away. Typically, we see 3 to 5 years out of a normal renter in the Cape Coral market. The maintenance cost on that side, again, taking care of the property is always going to be a big thing. We figure in 10% of whatever the rent coming in every single month as repairs. Depending on how that property is cared for at that point will depend on where that number actually comes in. And then leasing fee, if it is something that we would have to lease at that point. That's usually done as just an initial payment up front, so you don't see that month to month to month. So you'd be looking at about 340 as a cash flow on this property, with 15-year profit at about $189,000 and a 15-year annual ROI right around 11%. This is a new construction home in our market in Cape Coral. Kind of unique, right? That we're finding 3-bedroom, 2-bath, 1469 square feet. This particular property would have all impact windows, right? That's a really big thing here. Quartz or granite countertops. It's your tile floors throughout most of the wet areas. Vaulted ceilings, full lanais, right, or open air or screened in lanais. These are all the things that just kind of come with it. Plus, there's a 1-year warranty up front, which helps to minimize the maintenance costs, right, especially for the first year. So list price at $344, $344.9. After everything's said and done, you look at about an investment capital of about $114,000. Gross rents on this one right here would hit about $23.95 currently. Really a lot of desire for new construction, especially new construction rentals in our area. After everything's said and done, you're looking at about $21.69 in your fixed expenses. That's your taxes, the average insurance. These properties typically ex flood zone is what we are looking for. So there's no requirement of flood insurance. Gives you a monthly income of about $225, about $225 a month. And then again, these numbers right here, kind of the ghost numbers that you would see at that point, right? Gives you a profit of about $183,000 over the course of 15 years with an ROI at 10.67. All right, next, moving into, and this is actually, these properties are a huge kind of push for investors right now. And get more bodies under one roof, more renters in, it kind of buffers against any loss that would be there, right? If you have a vacancy in a single family home, 30 days out for repairs, renovations, you can run into a situation of losing a month worth of income at that point, right? With a duplex, it's nice because typically you don't have both of them vacant at the same time. I'm saying it can't happen, just saying it's rare. You've got a buffer for that. So this is a brand new construction duplex here. 3 bedrooms, 2 bath, 1 car garage. No flood zone, and on this particular property, the assessments have already been paid. So city water and sewer has already been brought in, as well as paid for by the builder. 605 is where this one runs in at. So once everything's said and done, we got an investment capital of about $196,000. Gross rents on this at the low end of it would be about $2,000 a side or $4,000 a month. Once you take your everything set up, you're looking at about $3,800 for everything said and done. So the property's cash flow tends to be a little bit lower, but the appreciation, right? The appreciation on these properties, to kind of put in perspective for Cape Coral, had investors, had you been an investor in 2017 in our market, duplexes that were built very, very similar to this, were selling at that time at about 250 a piece. And they're very, very similar builds. Some slight variations, but for the most part, very similar build. They were selling in at about the 250 price point. That number has obviously gone up significantly since that time. But you're still looking at a projected profit out of this property of 380,000, with a 12.9 return ROI over 15 years. So this property right here, this was one of the ones I was talking about earlier, where I said I had examples of 2 different properties. So this is a duplex in Cape Coral. Assessments paid, ready to go. Right, and on the next slide that we have here, this again, it's a duplex. It's actually through the same builder. I've got an identical one of these currently under contract with one of my investors right now. Same idea, brand new construction, nice lanai. They're a little bit smaller on the square footage side, but it surprises me that currently new construction duplexes on here and running a full CMA on this property before we went through it. Gross rents were sitting right around $2,100 a month, with some of them pushing up in the $2,200-$2,300 range. So you'll also see a difference on the Cape Coral duplex that we saw in there is at 605, right? This one comes in at 525. So everything's said and done out the door. You're looking at about 171, which is about almost 30,000 less than what you would be putting down on the Cape Coral duplex. Rents are where they are. Fixed monthly expenses come to about $3,265, right? The lower rate, the lower everything else. Insurances are cheaper out there. Taxes, because it's only county and not city and county out there. So that puts you at $3,265 with a monthly income at about $934. Once we take out your maintenance costs and your odds and ends, right? Maintenance costs, rentability is not a major issue out there, and the leasing fee, right, which is outside of the management fee, you're still looking at a positive at 271. Again, ghost numbers. That 934 is about what you would see as a monthly income coming in. 15-year projected is actually higher than the one at 605 at 405, 405,000, with an ROI at 15%. And I think this is a big reason why we're seeing a lot of investors from different areas, but a lot of our investors are moving into that new construction or recently built. I'd say pretty much anything from 2007 on in that Lehigh market, the rents are there. And the rents really at the end of the day is what allows for, you know, these properties to kind of go through what it is they go through the leasing, through the additional cash flow that comes in. And they have been, even on the listing side of them, I've listed a couple that are out there, people doing 1031s and whatnot, that have gone kind of the same route. They've received top dollar for their sales. The ones that are built like 2000 to 2010 on average of 450 or less. New construction, you're sitting at 525, so not a big difference in price, with cash flow actually being a little bit higher on the new. And if you guys have any other questions whatsoever in regards to the market, feel free. You'll see a link down here at the bottom, marshallreddick.com/Cape Coral, which will give you a kind of a full in-depth look at the Southwest Florida market, kind of what you're getting to, more so than what I've explained tonight. I only have an hour. It's a nice sized book that gives you a lot of things. But it's a great read if you're really considering investing in the Southwest Florida market. And if you are, by all means, reach out to Sherry in order to have that conversation and kind of get the ball moving. Any questions you have, we'll be more than happy to answer. And with that, I would like to pass this back to Sherry. You still there?
I am here.
Perfect. I'm going to let Sherry take over and kind of roll us out on this, all right?
Perfect. Jerry, that was so much great information. That's a lot to take in. So I know you guys are going to have a lot of questions. So please do feel free to reach out to either one of us. We can answer any questions and get you started on the path. Let's see if we can get this next slide to pop over.
It's all yours.
Perfect. All right. I'm just, not that one kind of got out of the way there. Hey, so after all is said and done, a lot of great information from Jerry, and I do thank him for doing this presentation with us tonight. And then I did want to mention something. If you guys haven't already been on our website and opened up your own Marshall Reddick portal account, it's absolutely free of charge. And one of the things we are very, very proud of here at Marshall Reddick is our education. Just like tonight's presentation, we also have a website full of information on anything and everything you could imagine in relation to real estate investing, any subject you could want, from short articles to data packages, just like Jerry had mentioned. We have taped webinars, videos, so you can watch, read, and listen to your heart's content at your own time and your own pace. One of the first things I would suggest any investor start with is our property rating ebook. Now, this is about a 20-minute read. And as you saw in the presentation, Jerry was talking about property classes. We have A through D property classes, plus Lux, luxury. And it's all written out and explained to you and why each property class is important and how it relates to cash flow and appreciation. Like I said, it's about a 20-minute read. It's an ebook. You can download it yourself when you open your account, your free account on Marshall Reddick, or if you need any help with that, I can download a copy for you and send it to you in your email, whichever you prefer. And then the other thing I strongly suggest, you got a little bit of a taste of this, Florida investing, and if you want to really delve deep more into how it would benefit you personally, we do consultations with you guys, free consultations. We spend anywhere from 30 minutes to an hour going through your individual situation. We talk about the why, how, when, what, where, and who. Basically, we set you up on a goal setting plan. We work on evaluating options, deciding your time frame, setting your criteria. Then we identify markets, and we introduce you to all the key players. We get you, as an advisor, we set you up with the agents, with property management, with lending, whether it be private or conventional, insurance. If you're doing a 1031, we have an accommodator. If you're putting this in a trust, we have trust attorneys, accountants, legal advisors, absolutely anything and everything you would need for a successful transaction, we can accommodate under our umbrella. Which is really, really special and really different from most brokerages, which just help you buy and sell a property. This is definitely what we call a one-stop shop. And then we also, this is just a little flyer on property management. And this is something I recommend you either take a little screenshot of, or once again, you can email either one of us and we can send it to you as a PDF. But our property management is definitely second to none. It's very important. We can't stress enough how very, very important it is to have the right property management for your investment. And I'm looking at my poll questions and we don't have any, but always feel free. Like I said, we're always available by phone, text, email. If you have any questions about tonight's presentation or want to delve deeper, please feel free, give us a call. And easiest way, if you want to remember my contact information, just take a quick screenshot. Once again, call, email, text. I'm available most of the time. I'd love to chat with you, set up a time, as well as Jerry. But I do definitely, encourage you to take the next step and look at a consultation appointment for the next steps that would really apply to you specifically versus just a blanket overview of the market. We can really delve deep into your personal situation. And with that, we're right on time. I just wanted to thank everybody for joining us tonight. And Jerry, thank you so much. You gave us a wonderful presentation and a lot of information to get us started.
Thank you. Thank you. No, it was a pleasure.
Perfect. All right, then with this, I will say goodnight to everybody and you have a wonderful rest of your evening. Good night.
Have a good night.